Thank you, and thank you to Red Cloud for hosting us today. Today I'm going to speak about TRIDENT Royalties, a diversified mining royalty company. All right, disclaimer we're all familiar with. So TRIDENT, we've been around for about 3.5 years. As mentioned, we're listed on the AIM exchange. We IPO'd in 2020 with one royalty, gotten to the point now where we have 20 royalties in the portfolio and continue to grow over time. I'm relatively new to TRIDENT. I joined back in March of this year. My background is a mining engineer, worked with resource capital funds in private equity for 11 years. And similar background to the other people of TRIDENT, who actually 3 of our 6 employees are ex-RCF. So, experts in the mining industry and in the field that we've been in for quite some time now. I think everybody knows about commodities and why we think they're a strong investment opportunity, and along with royalties as well, really providing significant exposure to properties without exposure to the operating costs, capital cost overruns, dilution that come from the mining industry that we see today. So really where TRIDENT differentiates ourselves and where we like to look at is, if you look at the global mining industry on a revenue basis, we say roughly a third is bulk metals, roughly a third is precious metals, and roughly a third is base metals. But within the royalty industry, 92% of the global mining royalty companies are focused exclusively on actually the smallest piece of the pie, the precious metals portion. And there's very few companies focused on the entire mining industry and building a portfolio that's representative of the industry. And then within even the smaller 8% of the industry that is interested in diversification, most of those royalty companies are exclusively single asset companies that have one strong asset in the portfolio, but not a diversified portfolio. So that's where TRIDENT really feels like we have a strong opportunity with the portfolio that we've built today, and we'll have the opportunity to continue to build over time and really stick to our views on value and not get caught up in competitive processes that we see very frequently today in the gold space, where they're highly competitive and people are outbidding themselves down to single digit or even negative IRRs. So over the life of TRIDENT, as I talked about, we IPO'd in June of 2020 with a single asset over an iron ore project in Australia, and had a good run up until earlier this year. Continue to see growth in the stock, almost reached 60 pence per share. Definitely had a tailing off over the last few months, as most companies have. But I think what this slide shows is not only is the continued good deal flow over the years, that we continue to be regularly announcing new acquisitions, not only on direct funding investments into companies, but also acquiring secondary royalties. And we continue to see excellent deal flow today as well, with very little competition. Most of the processes we get into, or the opportunities we see, we're one of the few parties at the table, which really leads to being able to deliver strong investments for ourselves and therefore strong returns to the shareholders of TRIDENT. Just highlighting a couple of the opportunities or the investments that we've made over the years and the value that we've already started to recognize in those. On the left are 2 portfolios that we continue to, or 2 investments that we continue to have today. A portfolio of gold offtakes that we purchased from Orion, and the Thacker Pass lithium project in Nevada, which is a core asset of TRIDENT, and I'll speak to in more detail. On the right side is something a little different, that we don't want to be a transactor of royalties, but when we did see the opportunity to transact on a portfolio of assets, we're able to sell those to Franco-Nevada. So a little bit of the little guy selling something to the big guy. But these are long-dated gold assets that we didn't see that we were getting much value in the portfolio, and would be years until we would see cash flow out of those opportunities. So we're able to make a very quick flip on those investments and more than double our money and reinvest that capital into other new opportunities. Cullinan was the first royalty that TRIDENT purchased and continues to see proceeds today, along with Mimbula, which was another early investment for TRIDENT. So talking about the portfolio today, we have 20 assets around the globe, a very diversified portfolio, not only from commodity focus, but also jurisdictionally. We're very open to most of the world and really we'll look at opportunities on a global basis. Of those 20 assets, what I think a differentiator of Trident, particularly for the size of company we are, is that 13 of those assets are cash flowing, which provides significant revenue to Trident today. In addition to that, while we are spread globally, 60% of our NAV based on our research partners is based in the US, Canada, and Australia. So global footprint, but significant value within strong jurisdictions. And a lot of people think as well as being a junior company that we would be transacting with typically junior parties or smaller projects. We have a very strong partners with Lithium Americas, as I talked about with Thacker Pass, along with Equinox Gold, Victoria Gold here in Canada, Mineral Resources in Australia, B2 Gold in Africa, Silver Lake as well in Canada. Then moving on, not only in addition to the jurisdictional diversification, continuing to build a diversified portfolio. Roughly 40% of our NAV based on our broker analysis is in lithium, and 40% of that is in gold, 15% in copper, and then minor parts in silver, iron ore, and mineral sands. This is a portfolio diversification that we continue to expand, and we'll continue to be looking to add new commodities into the portfolio. Bringing what we really like to think is almost an index fund approach to the mining industry, of that rather than trying to pick a single junior in different jurisdictions or different commodities. Exposure in Trident really will provide investors with exposure to the whole suite of mining commodities, really the global mining industry as a whole, with significantly less risk profile being an investor in the royalty space rather than just in an equity investment in a single junior asset. And primarily with our listing in London, as I talked about, that's really hit home in the London market of people that aren't necessarily as experienced in investing in mining, providing, as I said, kind of an index fund approach. So looking at Trident today, we have 6 employees. Last year generated about $14 million in revenue. This year we hope to be about the same. So we're in a very strong position where we are easily covering our overheads. We're not in a position where we're issuing shares at market to be able to pay salaries, cover due diligence expenses. We can run a legitimate business and continue to make investments in and grow the portfolio. We also have a debt facility with Macquarie, and we're able to easily service our debt requirements as well. But really what to me is the exciting part of this graph, obviously, is moving forward, is looking out into 25, 26, and beyond, where we see substantial growth in the revenue of Trident. And really where this growth is very tangible growth as well. It is not based on hypothetical NAV or junior companies that we're invested in that have significant CapEx builds in front of them, or projects that are not permitted or have significant ways to go. The precious metals, you continue to see growth there. A lot of that comes from Greenstone here in Canada, expansions from Victoria Gold in the Yukon as well. But really our core asset coming online in 2026 being the Thacker Pass lithium project in Nevada, which is owned by Lithium Americas. The company recently went through the split, I think as most people are probably aware, and General Motors invested $650 million into the capital build of the project. The company is also in advanced talks with the U.S. government around Inflation Reduction Act investments to help develop the mine. Some of the press articles of recent have talked in the $1 to $1.5 billion range for government funding from the U.S. government. So really, as I said, see significant growth in this portfolio as it sits today, but it is very tangible and realistic growth. Based on lithium price assumptions, Thacker Pass alone should pay Trident $25 to $30 million a year. If you look at lithium prices from earlier this year of $80,000 plus a ton, it could be paying Trident $70, $80 million a year. So very substantial revenue to Trident. We also have a couple of buy downs and prepayments in there as well, where we expect nice significant checks to come into Trident in the near term. Just talking quickly about our most recent transaction was another lithium project, a lithium brine project in southeast Utah, which is run by an Australian company called Anson Resources. We have a royalty basically over that entirely shaded area in any project that they develop in that region. And what I think is exciting about this not only is the opportunity, but also how Trident structured the deal and how we like to structure a lot of our transactions, and that it's a staged approach. Ultimately, we agreed to purchase the royalty from the current holder for $10 million, but only expended $1.5 million up front, and that the follow-on payments are really conditional on not only the project ramping up and developing, but on revenue and receipts coming into Trident. So making sure that we're exposing our shareholders to high-quality royalties, but at the same time, really limiting the downside risk if things do go wrong or permitting has issues or projects is delayed. We're only out the $1.5 million in the short term, whereas this project could pay $10 million plus a year to Trident once up and running. Then another recent transaction was a gold royalty over a project called Dandoko, which is a satellite deposit to B2 Gold's Fekola mine in Mali. And again, talking about tangible growth, while this is an undeveloped project, B2 Gold has been spending money on this project and is discussing it actively in their news releases, and spent $6.5 million US dollars in the first half of this year on developing this project alone and bringing it into the Fekola mill. So, touching again quickly then on Thacker Pass, really our primary lithium project. It's a 1.5 gross royalty revenue over the largest lithium deposit in North America. Construction is underway with production targeted in the second half of 2026. A number of other key projects we'd love to talk to you about in more detail later on, but just highlighting one of our iron ore and copper royalties, along with a silver and some of the gold offtakes that we have here in Canada. As I discussed, the management team, there's only 6 of us, 2 of us based in Denver, 2 in London, 1 in Zurich and 1 in Perth. So again, for a small company, we have a very global footprint and really we feel like we see most opportunities that do arise around the world, not only in the primary royalty space, but also secondary investments from people that hold existing royalties and looking to monetize those. With our London listing, we do have a heavy focus of UK, South African directors, both on technical, legal, and banking M&A as well. So wrapping up quickly, we have $25 million in the bank. We have a $40 million debt facility from Macquarie, so we have significant cash to spend and looking to spend those as quickly as we can and continue to build the portfolio. Deal flow with the equity markets where they are has really never been better for Trident, not only for royalty companies in general, but I think Trident specifically, in that our willingness to really look at the entire mining industry as a whole and being in opportunities that don't have significant competition and continuing to stand by our values in terms of the value expectations and return expectations that we're providing our shareholders. Lastly, I'll touch quickly on the right there is we're covered by 3 brokers, Libram, Stifel, and Tamesis. All have significant buy recommendations and several multiples of the share price as today. So, yeah, thank you for the time.